What is up, guys? Welcome back to the channel. Welcome back for a huge data drop. We got ECB interest rate decisions, CPI from the US, all happening right around the same time. And of course, we'll be watching Bitcoin and the crypto market to see the exact price reaction to these decisions. And warm welcome to all you guys. Hope you're having an awesome day. And a special warm welcome to everyone new to the channel. Hope you enjoy the analysis. And if you do find some value in it, consider joining us here in Team Crypto Unhyped for daily updates on the crypto markets. And of course, as promised, from January 1st, from next year on, I will be streaming 6 days a week. We're setting up everything on the channel right now to make that possible. And yeah, guys, awesome to have you here. And we have a lot to cover. So I'm going to get into the data right away. We're going to look at exactly the data releases that we have right now. And then we get into the charts. I want to look at Bitcoin or crypto versus the US stock markets. And of course, also the negative correlation to Dixie and exactly what these correlations and negative correlations can tell us about the current state of the crypto market and historical data points that might be indicating that potentially the Bitcoin and crypto bull market continues or found its top. So let's get started right away. Just waiting around a little bit to find some more viewers here, some of you guys joining us, but we don't really have time to waste, so I'm going to get right into it. And of course, guys, this will be available on demand afterwards. So if you missed anything, you can just go back and watch it afterwards. So let's start things off here with the news right now and the actual events that take place right now. We can see here that's Wednesday, December 17. Yesterday's data dropped, CPI data from Great Britain and the Eurozone, and there we saw that it came out weaker than expected, putting pressure on the Fed to drop interest rates over there. And there we can see here, we already had an interest rate decision this morning. As expected, the BOE, the Bank of England, dropped the interest rates by 0.25 basis points from 4% down to 3.75%. Now what we're waiting in 7 minutes, as you can see here, let me actually just check. Yeah, right around 7 minutes, we got the deposit facility rate from the Eurozone and the ECB interest rate decision. Of course, same thing as on FOMC meetings. Usually, the actual numbers that come out don't have such a big impact, don't move the needle as much, especially if they're coming out as anticipated. What we are anticipating is everything to stay exactly in range. Deposit facility rates at 2% and interest rates at 2.15%. So as long as that continues that way, we can't really expect anything positive or negative just purely based on that. The needle usually gets moved for the price when the speaker takes the stage. Of course, we know that that's the case whenever Jerome Powell takes the stage here for the FOMC meetings. And the same thing is when we get the ECB press conferences. That's usually the tone is the most important thing. The outlook for future rate decisions plays more into the price than the actual decision that we saw. And then tonight, I won't be covering this one. We have the BOJ, the Bank of Japan interest rate decision as well, where we're expecting actually a rate hike. So from 0.5 basis points, 0.5% up to 0.75% by 25 basis points rate hike. So really interesting how all this plays out. And then, of course, really interesting how the Bitcoin price and the crypto markets react to this. More data coming out tomorrow. Of course, we've been missing all the data from October, and now we actually get the delayed PCE data from October tomorrow. We see here, right, the month-to-month and year-on-year data while the Fed was flying blind throughout the entire October due to the government shutdown. This data is finally dropping and giving us some more indications of how the economy has been behaving since the summer, right? And that's what we want to see. We want to see a lot of data coming in until the end of January for the Fed to be able to make a decision based on all that. And as we see right now, for example, the data that came out so far here, NFP and so on, everything came out worse than expected. And in this case, it's actually pretty ironic. We know that, of course, for the economy, for the long-term sake and everything, we want the economy to be performing in a positive manner. But whatever is negative right now, all the numbers that come out negative put pressure on the Fed to continue cutting interest rates, therefore plays into the favor of risk assets and makes it more likely that interest rates get cut, right? So We got about 4 minutes left here until the ECB decisions come out. So let's go through some data here. And there we start with the Fed rate decision. The percentage has moved since yesterday, still at 77%, no change, 22% for 25 basis points cuts when the Fed makes the decision by end of January, on January 28th. Then we look at the liquidation heat map. As we spoke about yesterday, this is the area here that we've been looking at where we're expecting a lot of short positions to get liquidated. And that's exactly then. We didn't trade any higher than that. We came back down here to our home base where we found support the last 3 times here after getting rejected. Right in the $85,000 range, found support, and now of course the next task is to reclaim 89,000. There's a potential breakout right on the table right now on the 4-hourly chart that we'll get into in a second as well, and that of course would flip things bullish again, at least on the smaller time frames, and set us up to have another test at that critical $93,000 to $94,000 range, which then of course could turn everything around for Bitcoin, at least for the short to midterm, and potentially give us a move towards the long-awaited $100,000 area. So really, really interesting right now. And historically, for the last few events, at least during this bull market over the last months since this year, we've seen that Bitcoin has always been pumping before CPI. So classic, as the same is what I told you before with interest rate decision and stuff. It's usually the anticipation. The rumor time is what moves the needle. When the news drop, it's usually, unless it's something completely unexpected, we stay within the same range. And that is also to be expected with CPI, unless we see something very bullish or very bearish there. Right, then we look at the spot taker CVD. We looked at this yesterday, no big change here. We saw that historically throughout this bull market here, which this represents, we've seen that every time we came out of very bearish taker sell dominant times, we went into neutral and then usually into taker buy dominant times, and that's purely spot action here. So very interesting here to see if this can flip bullish now and the price moves up at the same time. Then that means that spot action is picking up, which then will translate over into open interest. We still see the lowest open interest since our lows in April, March. And of course, April, March, open interest has been much lower as we were clearly in a bull market. So let me explain that. When we're in a bull market, the open interest that's dominantly on the table, of course, comes from long positions. Here we can see that open interest has been completely flat. That's because open interest was basically only directed by not so smart money into one direction, that were basically knife catching with leverage. And here we can see that this is all here a very undecisive market, a lot of leverage traders trying to short the market at the same time, trying to long the market, other ones, and therefore we very low at open interest, but still stronger than what we saw during the lows in March and April. So very interesting from that perspective, that most of it here currently is very, very flat and just waiting for spot action to pick up. And that we can also see here actually now with the ETF inflows. Yesterday we had the highest inflows here since back in November 11th. So is that correct? Yeah, since November 11th, we have the highest ETF inflows in over 5 weeks. And that is, of course, a positive. If that can then drift over into the weekly ETF inflows here as well and turn bullish or positive for 2 weeks in a row, that, of course, a very nice sign there as well. I see Josh is in the chat. Shout out to you. Thanks for tuning in. Hope you had a good session at the gym. I'm heading down there in a second, right after this. And yeah, guys, let me check the time right now and to see if the data drops. I think we have exactly 1 minute left. And yeah, guys, this is the key data that I'm looking at for here at right now, as far as on-chain data goes, to see exactly where the money is moving into. And so far, the same thing still, guys. We're looking for spot action to really pick up in order for leverage to pick up then, and for the price to continue moving into a direction towards the 50-week SMA, where then of course we see if we're going to continue in this bull market or whether we're going to see a dead cat bounce, another lower high, and continue down to lower price targets. I will get into all the charts that potentially tell us exactly what's going on from that perspective. such as the correlation between Nasdaq and the S&P 500 with the crypto market, and of course also the negative correlation between Dixie, the dollar index, and Bitcoin as well. So really interesting data there, potentially giving us a very, very one-sided story, telling us that either the top is in or we're continuing in this bull market. But I want to keep my eyes here right now on the interest rate decision, the interest rate decision coming out of the Eurozone. Everything stayed exactly as expected. We see deposit facility rates at 2%, same as the previous, same as the consensus, and the same goes here for interest rate in the Eurozone at 2.15%. So nothing changed. Now the next big data drop here comes in 14 minutes. That's the core and the regular and the headline CPI data coming from the US. Of course, one of the key economic events, always one of the key inflation gauges for the Fed. So this data usually has a big impact on the price on its own. This is not something where we get a press conference after. There we get the data drop, and if it's better or worse than expected, then it usually moves the needle for Bitcoin and the markets. So we'll be back here in 13 minutes to see exactly what's going on there. And in the meantime, I'm going to get into the charts and look at the key levels for Bitcoin right now. So we're starting out on the smaller time frame here, as per usual. Not as per usual, usually we do a top-down analysis, but as per usual when we see big events coming up. And there we can see that we're right in a key spot now. Here we're at the pivot point to break out of this local downtrend here. You can see the last significant lower high here right at $88,000. And that, of course, a strong trigger here for long positions, but that's FOMO territory, guys. Longing on these kind of breakouts here, where we have a double bottom formation, and where we then see here that we have very strong absolute trap city there. We saw huge wick to the upside, and then a massive bearish engulfing immediately after on the hourly chart that then translated into this huge shadow here on the 4-hourly chart. So that's why I'll tell you guys, when we're coming out of critical territories to make decisions on based on smaller time frames is absolutely crazy, right? We are on the edge of going down either into $70,000 territory or climbing back up towards $100,000. So we can't really go off the hourly chart and off a support level where we have not really flipped bullish on any significant time frames before. You can't see the chart? Okay, that's a good point. Here you go. So, sorry guys, forgot to switch this around, but this is exactly here the trend that I've been talking about. Here the last significant prior lower high that we now want to get above. That lines up here with the 50 on the Fibonacci retracement for the entire range from the lows to the highs here. And there we can see that is the clear level that we want to get above. Right above us, the 50 EMA. And then here, that's critical for us to reclaim here, right at $89,000. The 38.2 on the Fibonacci retracement, which of course has a strong hit rate always when we get a strong reaction of the 61.8. And therefore, this is critical territory that we want to reclaim first. And that's what I'm talking about. Once we get back above $89,000, we still have one huge task here before we can even consider this chart to flip bullish. We see here, we come out of this downtrend here. On the 4-hourly, we look at it locally from here, perhaps. There we see the last significant high here, lower high in the range here, was a cluster of these two here, giving us that range between $92,500 and $94,000 roughly. And that's where we want to get above. And there you can see that now lines up here with the downtrend on a larger scale as well, where we see here this massive trend line holding the price down. And there we see the 200 EMA as well. So that's what we want to get above. The 200 EMA breakout here and confirm above that. That then, of course, makes it look very strong. And then we can start looking at the $100,000 range, which of course here becomes much clearer on the daily chart. A break above here then is the same thing basically. That sets us above the 50 EMA on the daily chart as well, making the 200 a natural target here. And that lines up perfectly with the prior range lows here in the range between $99,000 and $101,000. The key range that we want to reclaim as support to then also have a shot at breaking the last significant lower high in that downtrend right at $106,000, which then would flip us bullish on the daily chart and make it very likely that we at least have an attempt at closing back above the 50-week SMA. If that then happens, then of course we look very, very bullish here, and then we have a chance here to get back at the 8-year resistance. So the key takeaway from this, guys, is that we can't really base our decisions on low time frames when we are at critical high time frame support and haven't even flipped bullish on a lower time frame yet. So this is what we want to do here. Breakout of this hourly downtrend here, or this low time frame downtrend, then flip bullish here, get above $93,000 with confirmation, with volume, and then we can look at the $206,000 area, and that's where it's at then for the long term here and for the potential continuation of this bull market. Guys, I gotta keep my eyes on the time here to see when the data drops. CPI data, of course, very, very important here for the current market, especially. We still have 10 minutes left. So let's get back into the charts and here look at quickly at the correlation between Bitcoin or crypto and the stock markets. For that, I go over to the monthly chart. Actually, we look at the higher time frames here. I'll get back into the Bitcoin higher time frames as well, the weekly chart and the monthly chart and so on here towards the end of the week. But of course, now during this massive data drop in these last couple of days, really need to be focused on the short term to catch a pivot point if it gets broken to either direction, so we don't miss out on any opportunities here. So let's get into the Nasdaq's chart here, for example. I'll pull it up and there we see at the bottom, we see the Bitcoin chart. And let me just pull up some more data for you guys here. There we have it. So you see the green lines is when Bitcoin bottomed out and Nasdaq correlated with that and also bottomed out here. So we had it many times here. We see that very strong here trend line. This is actually logarithmic, that's why it's off. So there you see very strong trend lines here, of course, parabolic trend lines for either for both assets, for asset classes. We see here the Nasdaq, of course, heavily influenced by tech stocks, therefore a strong correlation with Bitcoin as well. We just look at the two last cycles here, where you can see that Nasdaq bottomed out at the exact same time here, give or take a few days. And then you want to look at the duration here of the cycle. You see how spot on that has been if the top happens to be in now for Bitcoin. 1,064 days here from the lows in December 2018 to the top in November 2021, and the exact same length of the cycle from the previous bear market bottoms to the current top is exact by 1 day difference. We see at least on the monthly chart, of course, it becomes more precise if you would look at this on a smaller time frame, but very interesting. And then we look at the top there. From that perspective, what we can take away here is that, of course, Nasdaq has not fallen down to support yet. Nasdaq is actually, if we look at it on the smaller time frames here, currently working at a double top formation, especially if we go as low as the daily here. We can see here a double top formation with a lower high. So we're looking at the current low here. Any closes below really 24,000 here, that give us clear indication that the top is in for Nasdaq. And then we can see a likely pullback back to the trend line that we saw on the larger time frames here. And that, of course, would mean that, as we can see, the tops, when they were in for Nasdaq, that is also always in perfect alignment with Bitcoin tops or crypto market tops. This is actually the crypto total market cap chart here that includes everything in crypto. And there we can see we topped out here back in 2021 as the exact same time. And now if the top is in here, then of course Nasdaq would be expected to come back down to support here on this dynamic support line. And that would also then mean, since we always bottomed out at the same time with Bitcoin and the Nasdaq, that the bottom is not in for Bitcoin, that there's still room to the downside. Of course, that means that we could be in the range of the bottom already. As you can see in the last cycle here, the crypto, I keep saying Bitcoin, but that's the total crypto chart. You can see it right here, total crypto cap. So we can see, of course, last time around when we printed our low, that was in perfect alignment with the range of the prior cycle top here, and therefore likely that we are in the area from that perspective. But of course we can also shoot a huge wick down here, just like we did in memorable times back in March 2020, and continue here in this range, but still drop as low as to $2 trillion for the total market cap, print a bottom there, and then can continue here in this trend. But for now, the correlation that has been perfect so far for the last cycles at least shows us that there's likeliness that for the top for NASDAQ is in as well. It will come back down to support here as it has done every single time so far, as long as we're tracking it back here all the way to 2009, 2010. So very, very strong long-term trend line, and therefore a likely target here for the bottom for NASDAQ. And then that would mean, of course, that we still have some room to the downside as well for Bitcoin, unless we see a huge wick here now, or a huge candle just dropping from 24,000 all the way down to 16,000 for NASDAQ, which is rather unlikely. So therefore, this really, really indicates here, of course, people are saying, hey, NASDAQ is pumping. Why is Bitcoin not pumping? Does that mean that Bitcoin still has a leg up? And really what I see here in this chart is something completely different, right? We can see that if the top would be in for Bitcoin right now, that would mean that the NASDAQ top is in as well, according to the data that we see in the chart, right? Here we see it lined up perfectly, and then it bottomed out all together as well. So what we can expect now is here it moves down, and that Bitcoin still has some room to the downside, of course, or the crypto market cap, right? And we could see also now, due to the fact that another chart that we've been looking at a lot here on the channel, which is the where do we have it? The others chart. So guys, I got my internet sorted out today. we get some extenders here in the house today. So hopefully tomorrow with the next stream, everything is going to be a lot faster here. But this is something that we looked at here a bunch of times on the channel, that we reached are right in the neighborhood of a very strong area. We actually tapped into it. You just can't see the wick here because of that vertical line, but we reached that area. That every time we reached that area, we went on bull runs for Bitcoin before. So here you see the total market cap excluding the top 10 tokens at the top, and the Bitcoin or the crypto market cap chart here, total market cap chart at the bottom. And there you can see every time we reached that area, we went on huge rallies here in that area, and that happened every single time, here, here, and here. So this shows us something that I spoke about before, that we could see if interest rates drop now, that Bitcoin moves up much slower, gets back to the 8-year resistance. Let's go have a look at the 8-year resistance here as well. And while Bitcoin gets stopped out in the area of $130,000 to $135,000, we could see that altcoins really start dominating and start reaching up towards that trend line, that 8-year resistance as well. So if we look at it here on the monthly chart, we can see here that, of course, the 8-year resistance has been the key resistance point in this cycle here. Once again, we see the tops all connected here. So if we get a bounce now from this area, then we can expect Bitcoin to get heavy resistance there as well. While the total market cap, if we look at it here, let's look at the total 3 market cap, for example, is still far away from that 8-year resistance. We see that we had the same thing here, 2017, 2021, the tops connected, but we got nowhere near yet. We're actually stuck here, still haven't printed a new all-time high from that perspective. So that would give us here much more room to the upside, and altcoins could get way more dominant then, because of course Bitcoin has a limited, only limited room to the upside. And things could flip from that perspective. And the same thing here, actually, that correlation is the exact same one that we see with the S&P 500 and the crypto markets. So we see here, get back into, they can see the exact same thing, right? And you see the cycle length for the S&P 500 have actually been as accurate as Bitcoin. If you would consider now that the top is in for S&P 500 as well, which is in a very similar spot, trying to print a lower high double top formation on the smaller time frames now, of course, if that gets confirmed and we see a break in the structure, then it's very likely that S&P also comes back down to this very, very strong support line here, where you can see we have it confirmed with at least 3 touch points here, taking it all the way from the March 2020 lows to our current spot here. And there we see that that lines up here, the trend line now also nicely with the prior highs here in that area, and a very strong area of interest. Therefore, we could expect the S&P 500 then to fall down from its highs of 7,000 down towards here somewhere in the 5,000 range. And there, of course, then it becomes very interesting, because that would mean then that the bottom is in for S&P 500, for Nasdaq, and then likely that we see the next leg up here in the next bull cycle for Bitcoin as well. Of course, we need to see as well if that cycle theory is still relevant at all, the 4-year cycles theory for Bitcoin, because a lot of people are just talking about liquidity now, liquidity in, liquidity out, as we have much bigger market makers right now. And yeah, really interesting how the dynamics will change there. 2:30 on the dot right now. Let's get back over to the economic calendar and see if we got the data out. There you can see it, CPI data here, year on year, is weaker than expected, which of course is a good sign. We see that it dropped by 2.7% from the expected 3.1. This puts pressure on the Fed again, and therefore a good sign actually. Initial jobless claims, previous was 237, forecasted was 224, exactly as expected. And then the Philadelphia Fed Manufacturing Index also much weaker than expected. So more pressure on the Fed. And up today is the last most current data from November. The data for October has been canceled for CPI, but we're getting PCE data tomorrow from October, and that's going to be interesting again. But there we see pressure on the Fed once again for the rates to be cut, and that can potentially then, of course, have an immediate impact on the Bitcoin price. Yes, we see it. Bitcoin back above $88,000 right now. $8,000 right now, right this second. Let me pull up the chart. You can see, and we got right up to the 50 right now. So we're trying to break out here from the local downtrend right as we speak. So this is where you got to keep our eyes on here now. On the 4-hourly chart, we want to see a close above $88,000, and then here, of course, reclaim $89,000 as support to get a shot here to retest the area here right at $92,000 to $93,000, where it then becomes all decisive if we can reclaim the 200 moving average, the 200 EMA here as support, break out of the long-term here or mid-term downtrend as well from the higher time frames, and then potentially finally see our move up towards the $100,000 range. So really, really interesting spot right now. And everything looking pretty positive as long as we can confirm the breakout here. We don't want to see another fake out. And I always tell you guys, don't FOMO into these things. When we're coming from a key support level, we want to see at least the 4-hourly flip bullish, break the downtrend. You can, once again, guys, downtrend ranging sideways does not mean that we broke. Just because we broke the trend line does not mean that we broke out of a downtrend. For that, we need to reverse and confirm that we're printing higher highs and higher lows above the last significant lower high in the downtrend. So we still have a lot to do right here, and we need to see that we get a close above that $88,000 level now, reclaim 89,000, and then finally flip bullish here by breaking that key area between $92,000 and $94,000 here. And then we want to see that drift over into the daily chart here. We want to get a close above here, that key trend line. We want to reclaim the 50 EMA as support, and then logical target here once again becomes that area here between $101,000 and $106,000. Could potentially go even higher than that to $107,000 or $108,000. Then it becomes really interesting if... Oh, thanks, Josh. You should be pressing the buttons from the distance for me to switch those. I keep forgetting. But yeah, guys. So we see on the 4-hourly chart right now. Once again, guys, I get back to it. And excuse me once again for the internet. This is where right here, just when the numbers released, we tested the 50 EMA, and that's where we want to get above here. Right now, this pivot point, the prior high, you can see that's the line where we are right at now. And there we want to close above, confirm above, reclaim 89,000 here as support, and then we get a shot at testing this area here where we have the 200 EMA, the diagonal trend line, and also that key range that we want to break here between 93,000 and 94,000. And that was exactly the same thing here on the daily chart. That's the same spot we want to get above here, 93,400 on a daily closing basis here. And then of course we want to reclaim the 50 EMA as support, giving us the 200 here as our natural target. And then the pivot point in this downtrend here is right at $106,000. If we get back above there, then of course that is very strong early indication that we are moving upwards to test the 8-year resistance again into the $130,000 to $135,000 area. But above all that is, of course, the 50-week SMA. We first need to reclaim that as support here while we're sitting on the 100 SMA right now. We want to get above there, reclaim it as support, and then there's nothing in our way anymore here to test the 8-year resistance. So, of course, data that dropped right now from the US is negative in itself. But as this data, whenever it drops negative, puts pressure on the Fed to cut interest rates, it's actually positive for us Bitcoin holders and for everyone that's getting into risk assets. So really strong here. And now, of course, we see in 9 minutes, we have the ECB press conference. Guys, this is not something that I will be covering here on the stream right now, but if you should keep your eyes out for that. You should definitely look into that and look at the tone from Ms. Lagarde. If it's rather hawkish or dovish, as you know, that can really move the needle. But for now, we saw exactly what we wanted to see. We saw that the interest rates have been dropped in the Eurozone. We saw that the deposit facility rate have not been dropped, sorry, have been maintained as expected. Would have been, of course, great if we saw interest rate drops in the Eurozone, which is very unlikely to happen at the moment. And then we see here the pressure coming onto the Fed due to the to the negative CPI data. Let's refresh this page here again to see if the rest of the data comes out as well. I want to see what is happening with so far we only got the month-to-month data. Guys, really sorry about this internet. I have it all set up for today to get fixed. I was hoping it would be done before the stream starts, but we are in Spain, so mañana is their favorite word down here. So that means tomorrow, and that's likely to happen, but I'm still hoping that I get it sorted out by the end of today. So tomorrow, once I stream, I got everything working perfectly. But yeah, let's see if the data got updated here. See guys, this is what I'm dealing with. This is super slow stuff here. Yeah, we see here CPI year-on-year data, the core CPI data, and the headline CPI data for month-on-month has not been released yet, but the year-on-year data weaker than expected, therefore pressure on the Fed. So yeah, guys, I'm going to wrap it up here. And I'll be back tomorrow, see when the data releases. Same time tomorrow, when the PCE data comes out, I'll be live. So right around 2 p.m. Central European time, which is 8 a.m. Central European time. And yeah, guys, I hope you enjoyed the stream, especially if you're new to the channel. Really nice that you joined me here. And yeah, guys, if you want to see more of these kind of streams, I'll be doing them, as I said, from January, especially. Now, throughout the Christmas time, I'll be winging it a bit, but I'm still trying to do 3 to 4 a week and give you short-term updates as well. But from January on, we're really switching up the gears here and coming out with 5 to 6 times a week streams, and then also a lot of short form content across all different social media platforms, TikTok, YouTube Shorts, Instagram. You basically will have a hard time to not see me on social media if you're following crypto. And that is the plan. We want to grow the channel. I want to give you guys data that you need to see when you need to see it without any hype. Therefore, Crypto Unhyped here. We're purely looking at the key levels so you don't miss out on opportunities. And I'm going to focus a lot on strategy as well. At the moment, it's a bit difficult for me to cramp everything in when I don't really know when I will have time to stream and on which days I will actually stream, as I have so much stuff going on. And as I told you in yesterday's stream already, my main concern right now is to bang everything out, to put a check mark behind everything so I can fully focus on streaming and on growing the channel and Crypto Unhyped from January on. So guys, thanks for joining me. I'm out of here now, heading down to the gym and got a fully packed day once again. Hope you guys enjoy yourselves. Hope you guys enjoyed the stream. Don't forget to activate all those buttons down there, especially that subscribe notification button. And also, of course, a little button that a lot of you forget, the like button. It goes a really long way here and helps me out more than you know. Right, guys, out of here now. As always, happy trading. See you soon.